28th of October, Friday. Stop kidding yourself. Recession is coming in. Now, I'm pretty shocked when I saw some people are calling for market bottom. They are saying that the market has going to go up soon. There's going to be another 20 to 30% upside in the short time. I totally disagree. I know that by saying this, I may give myself a bigger problem, but I believe that what I'm seeing right now is pretty clear. And today, I must show you all this information for you to do your final decision, all right? Thank you once again for all the good wishes, guys. I'm recovering, but still the cough, the phlegm is still ongoing. So I will still have to go slow. So pardon my lack of enthusiasm, yep. Now, once again, guys, do risk management properly. This is going to be very important. It's a very critical time. And thank you, AIMS, for the kind sponsorship. Now, the thing is this, just 2 months ago, we all know that Federal Reserve have been saying that they are going to expect more rate hikes coming in, right? So in September, when the Federal Reserve increased rate hike by another 0.75%, right, they has pledges more hike to come. And in October itself, they already keep on reminding people that there will be more rate hikes. But incredibly, just suddenly, all right, just now, everybody thinks that there will be a pivot coming in from the Federal Reserve. Everybody thinks that there will be a rate cut coming in. I mean, seriously, guys, then what's the point of having a rate hike when you are expecting a rate cut then? So something is definitely not there, okay? And of course, people are getting worried because they felt that if this is going to continue, right, it will create a unreversible recession. But my point is this, isn't that what we want? Because if you don't do that, there's no way the inflation can come down. So we can see that ECB yesterday stunned everybody with a 75 basis point. Okay, they increased by another 75 basis point for the interest rate, and now the race to the raising rate is ongoing right now. You can see that this is where we are now. And Canada is at 3.5, New Zealand at 2.75, Australia is at 2.5, and so forth. So it's nothing that everybody's doing that, because everybody know that the problem is going to continue if they don't actually exercise prudent measurement, okay? But we have to understand one thing here, guys, is that now we are still at a very high level on the CPI data, and although the market wants at a 2 to 3%, then there's something must give in. Something must give in. So the projection of the Federal Reserve, they're looking at it go back down below 3% for the CPI data. But I'm so sorry, the only way to do that itself is you have to keep on hiking interest rate to reduce the people spending. Then that's the only way out. But the problem comes in at the same time right now. Back in 2020, 2021, when the stimulus checks were all given, we have a very strong economy, all right? So 19, 20, 21, the market rebounded very strongly with the shortest recession in 3 months. But we have a problem right now, guys. Apparently now, right, about 40% of the respondents in the market right now, I mean, those who are being interviewed, is saying that they have somehow difficulty in paying for their expenses. So this is a problem here, guys. It's choking the people. Yes, we understand. But if you remember, Federal Reserve have already said that there will be more pains ahead, because you have to, something must give in. If you want inflation to come down, then certain things must give in. And of course, one of them is pain, okay? You let pain come in. So since 1950s to today, you can see that usually when there's a rate hike up to about 5 to 6%, usually we have unemployment at about 5.2%. But at the moment now, the unemployment is at 3.2%, so which means that we still need to have a little bit of more unemployment. This is something that we need. Then we can actually see the core inflation coming back down. So this is a statistic since 1950s. It's something you can't run away. And all these data tells you very clearly that you need to have the if the rate hikes need to go much higher to bring down inflation. This is something that we cannot deny. And the thing is this. Look at this chart right now. You can see that once we have the effective fund rate going up itself, right, then usually once they meet, you can see that the unemployment rate will have to go up, and of course that will come immediately with the thing called recession. So think about this. Unless you're telling me now they want to stop raising rate because they feel that the market may go into recession, then my question to you is, and then what is about inflation? Now, Federal Reserve has two jobs, right? Inflation to keep it low, and of course to make sure it stimulate the economy. So the problem is that the economy is not doing any better. Then how can they, reduce the inflation. So something must give in, right? So you can see that every time when the Federal Reserve start to increase their Fed fund effective rates, you will always see a crisis of different type. All right, although it's a different type of crisis, but it's always there. So that's the reason why I felt that we will see that recession coming in. And of course, if we do a direct survey on the numbers right now, whether it's the unemployment data, the ISM manufacturing PMI, the core CPI, the credit spread, the high yield credit spread, and so forth, at the moment now, we are not near that type of point of a crisis. So that means there's still a lot of room for the Federal Reserve to increase interest rate, right, before they can actually do a pivot. Pivot means that they change their policy. So the only thing that is like now ringing a dong or the bell is that this the volatility index and the MOVE index, right? They are at a higher level, but the rest itself is still pretty okay. So if you look at it right now, you can see over here, this is the volatility index. Yes, we're having going up. That's the reason why recently you notice that the market, we can have a big lot of buy up suddenly and then I'll sell down and then move up again. So this is ongoing right now. And of course, whenever this particular index goes up to this area, about 175 to 180, then it will always come out with, there'll be a sudden big crisis coming in. So something will give in and then it will break and things will happen. So the thing is that people have been asking, but Cal, yesterday the GDP number was good, right? So how can you say that the economy is not doing well? Well, of course, I'm pretty shocked when you see the GDP numbers at 2.6, and of course we saw the Atlanta data, the data was also showing that 2%. So I tried to take a look itself and see what actually really happened, because you can see that the first quarter and second quarter were all negative. So to jump up to 2.6 is quite interesting. So I look at it, then I realize what happened. You notice that this is the 5 different colors to set the stage. Now we can see very important that there is a huge uptick about two on this is the net export. So the net export actually created the buffer that brought the GDP numbers higher. So think about this. What could be that? It can't be chips, right? Because the chips is not going out. Then what's that? The only thing I think of is energy. And of course, we know that now we have a problem also. Because why? We can see that Europe now, there's so much natural gas. Okay, so much until that the price actually at one stage actually turned negative. Just like crude oil back then turned negative. Now, why is that so? Because now there's so much supply. So think about this. If US has been sending out a lot of energy out to the market last quarter, now if the price now has reduced, then of course there'll be lesser spending, lesser sending out, and what will happen then? What will happen next GDP numbers? And of course, don't forget that the thing is that people are not able to continue to pay their bills, so their credit cards are coming in, they're spending a lot of credit card bills, right? So if they are spending a lot, now the question is this: they have difficulty in paying and the rates are high right now. So what will happen in their so-called expenditure? So the thing is this: I felt that the GDP numbers that went up last quarter was really because of the last burst of fire and people are spending. But the problem is that if you look carefully itself, this may actually trace pullback in the next quarter. So I suspect that the next quarter will be bad. And of course, to make it even clearer to this itself, we can see that the FANGs are not doing at a good well. I mean, other than Apple that came out pretty decent result, Amazon was bad, Microsoft was not so good, Google was terrible, and of course Netflix, we have the so-called sudden increase of the subscribers, but you can see the stock price itself didn't really, after the initial upside itself, there's some pullback. And of course Facebook or Meta is in damn bad trouble, and I'll tell you this very shortly. So with all this information, it just cannot deny that the GDP numbers is only for 3 months ago, but the current situation right now, the companies are not doing well, people are hitting the point that they cannot pay for their bills. It will lead to that recession point, and we don't know what will be the catalyst, but I think we're not too far away from that. Now, the last one on this side here itself today is Jim Cramer. Oh my god, he's so sorry for his call, because Jim Cramer has been calling to buy on Meta, and you can see that he is definitely a pretty good friend of Mark Zuckerberg. He has total faith in this CEO, right? So when the data came out, and my god, the Meta share plunges, right? You can see Jim Cramer really has to admit his so-called mistake. Now, I have been calling for sell on this Meta since 150 to 160 because I was very confident that Meta have a problem. with the current situation right now, with their so-called adventurous decision to do the metaverse. Now, I mean, I'm so sorry, maybe I'm just a old man here, but I cannot find the value at this point right now. And think about this, okay? Think about this. We can accept AI coming in, we can accept virtual reality, but with the whole world economy not doing well, I think that people will just hold back on this particular area. So of course, Mark Zuckerberg can have this foresight to believe that maybe in the next 3 to 5 years things will be better, or things will be going towards this point. I'm not saying that it won't, but I think that we need to have reality first. So I suspect that there will be a bit more selling on this meta and then the whole market before we can have the so-called real bottom. Alright, so that is my take on the fundamental side. Let's look at the technical side, and I just want to have this to share with you. This is the Dow Jones chart, okay? This is the simple one for today. Now you can see over here that it's beautiful. I did the math calculation for you. The 85% to the 90%, the in between itself is 87.5%, and that particular number is 32,334. And you can see yesterday the Dow Jones touches it and pull back. If we do a trend line, a projectile into this, you can see that it's beautiful, okay? So if you ask me, if you really think that the market is going to bottom out, right, then I will say that we need to have the Dow Jones going past 32,334 again, and then if it stands firm above this, it will break the trend line and it will go up to 33,000 level. Okay, that is the so-called buy momentum. But on the flip side, if the market fail to stay above 32,334, then I'm so sorry, we're going to see the market coming back down to the 85% mark, and that is the 31,411 marker. Now in terms of RSI, overbought, oversold, you can see over here itself, you can see that the last time we have this at RSI above 70, the market U-turn came down, and that was here itself when the market was slamming all the way in. Then after the pull was even worse than this initial upside, right? So if you look at it over here, we are pretty near at this point. Now I'm not surprised if you say the market purposely push it up again, but if the market fail, then of course the selling will likely be worse than what we saw here, and I believe that we may see the Dow Jones coming down all the way to 27,715 area. It's something that I felt that it may go, all right? And China is in a very bad shape this morning, and it continued to fall yesterday, and now it hit my beautiful support. Now this number 11,469 was a number that I told you guys weeks ago, and the market really came down and is now held here. So of course we may see a small rebound around this area on technical round, but if let's say you ask me, this is terrible because this is a very heavy selling wave, and with so much foreign investors getting out from the China market, then of course the Chinese economy may not be doing that well, and there will be a repercussion problem, and it will spread across the whole world, and that's where I fear that the catalyst being found from China instead. Okay, and to just wrap it up for you guys, just give me a moment on this. Crude oil yesterday has created a doji directional day for today, so which means that crude oil, watch out carefully. If crude oil pulls back to 86.49, there will be some profit taking to 85.50. But if we can stay above the BNB RL, which is at 88.55, then we may see all the way to 90.52. Now, of course, if crude oil price goes higher, then it's pretty natural to expect that inflation will still going to go up, right? And we can look at it right now from the start of the month until now, the market overall, if we compare the last month, let me just click this away. This is last month's entire last month's numbers, and now we are here, so we are actually slightly above the entire average of last month. So which means that cost is still increasing, and this is not a good sign if you ask me as a Federal Reserve Chief. All right. So guys, take note of all these numbers. I wish you the best. This is Kel signing off. I'll see you guys next week. Bye bye.